roughly half Americans pay no income tax, right? Because you get a standard deduction.
Yes.
No income tax. So those people, if they're saving for money in their 401k or IRAs, it should clearly be in the Roth.
That's correct.
They're either in a 0% tax bracket or a very 10 or 12% tax bracket. It's only, I think, like 15 or 18% of taxpayers are in a tax rate higher than that 12%, that first bracket.
Say that number again?
It's like 18% of taxpayers.
So
half of the revenue comes from the 1%.
So that would be 60% of the population is it below that bracket?
No, like 80%. 80% of Americans should be using a Roth 401k.
All right.
Like there's no questions even asked. Like just should be Roth.
But the reality is those people don't have any money and they don't have any money to save. They're living. It was like growing up. My mom used to say, "Oh, we should have bought that. We should have bought that property down the street, like 20 years ago." I'm like, with what? Where were you going to get this magical money that we were all of a sudden becoming land barons?
A couple of years ago, I was up in Tahoe, and there was this one area of Tahoe. These lots were sold there $300 a piece in like 1930 something. Okay. And someone said, "Why? It wouldn't be good if the family." I'm like, who had $300 in 1930? You're in those
rich people. Okay, so the point being, the Roths.
But if you're in a higher tax bracket, then you got to really look at it. Do you want to do a pre-tax or a post-tax? And if you're going to convert, how much do you convert?
And when?
And so it's the beginning of the year. I went on to my own 401k because the contribution limits increased this year to increase what's going in. And I do before tax. And I thought about doing Roth.
And?
I went before tax.
Because?
There's a chance federal income tax rates will go higher.
Okay.
Right? There's clearly that can happen.
And
I'm
interested in this.
There's also a chance that maybe there's a complete reform in taxes, and we now have a national sales tax with a lower flat tax rate. That's in the realm of possibilities.
Okay.
There's also a possibility I don't stay in California the rest of my life.
That's probably the biggest one. Do you really think that we'd go to a flat tax or a VAT tax?
And there's also, I'm probably not going to spend.
Some of it's going to go to charity.
Yes.
Right.
So with all those factors, I went, and I don't like the way California spends money, so I just assume take a pre-tax.
Why would you say that? They just laid 22 miles of the high-speed rail. They've been working on it for
20 years, $100 billion.
22 miles. Come on, Scott, it's 22 miles. It's a long way, 22 miles.
$26 billion on homeless.
Holy smokes. So back to that, the tax. Do you think that we would ever go to a flat tax? I just can't see it because it's not
politically.
It's not progressive. We have a very progressive tax system.
Right. That's why half of Americans don't pay any income tax. Now they'll pay payroll tax. They'll pay Social Security, of which they'll get a benefit from.
Yeah, but so if you went to a flat tax, would that not be considered a regressive tax?
Well, wouldn't be
a sales
right,
tax.
It's by very nature. A sales tax would clearly be regressive.
Yes,
because higher income people don't consume all their income.
Yes,
and to your point, if your mom's saying, "Oh, I wish we would have bought that property," there was nothing. I mean, there's barely like which bill do we pay this week?
Oh yeah, I always got a kick out of that. Never said anything though because I love my mom dearly. Didn't want to upset her, but I always thought, I grew up in this house. I don't think there was money splashing around.
It is clearly possible that tax rates are lower, and we have a national sales tax, value-added tax. I mean, the EU's got it. It's 17, 22% somewhere.
But they have a progressive tax rate as well.
Yeah, but not both. A lot of countries are lower than ours now.
All right. Well,
I think part of it, when you're considering things like Roth, and
you've got to take legislation into account. You have to recognize
what you're betting. You are betting that the tax code's not going to be dramatically different and that your withdrawals will be tax-free.
That's correct, right? So
it wasn't that when I started in this industry in 1990, there used to be an excise tax
On pensions, wasn't it?
on 401ks of greater than 750?
Yeah, there was a name for it.
It was a 15% excise
Yeah,
tax.
what was the name for it? There was a name for it. It was a
remember the name.
tax code.
I remember numbers. I don't remember names. But there was an excise tax.
I remember this.
If you had a lump sum larger than,
Yes.
I think it was 750, wasn't it?
Yes. Yeah.
There was an excise tax.
We were retiring.
So put that in today's dollars, that'd be like $2 million, $2.5 million. There was an excise tax.
Yeah, so the money would go into an IRA, but you still had to pay a tax on that transfer.
You paid an extra tax for doing a good job saving.
Yes.
So when you're even when you're looking at Roth conversion, some of those things like.
Yeah, just don't buy in 100%.
That's right. You want to diversify your tax strategy the same way you think about diversifying your investments.
Yeah, I was talking to a friend the other day. It's like it just blows my mind that we get people to qualify for the Obamacare insurance that are worth millions and millions of dollars. These clients are worth millions and millions of dollars, and they get this
Subsidized.
health insurance because of how we negotiate through the maze.
That's because it's not based upon assets. It's based upon.
Did you just find that a little bit crazy?
There's lots of crazy things.
I don't know. I just find it just, and I participate in it. I'm helping them.
I had a conversation over the holidays with a family member that there was the discussion on lifting the cap for Social Security taxes on wages.
Okay.
Right. So, what is it, 170 grand a year, somewhere in there, where you pay Social Security taxes up to that point of your wages. Above that, there's no tax.
Yeah,
no,
and on both sides, and then Medicare goes unlimited on
Medicare
income.
goes unlimited. Yeah,
On earned income.
correct. Wage type income.
Yes.
Or self-employed income. And so I was talking to this person that they thought, well, it would seem to be fair there shouldn't be that cap on there.
Why? Well, that's what you said. Right?
Well, no, I said here's the challenge. When we've got the top tax rate at 37%, plus we've got the 3.8% excess tax,
I don't, whatever that, yeah.
which is 0.9% above the Medicare tax. So, so let's call it 40%. I'm a resident of California. The top rate there is 13.3. So now we're at 53%.
And you don't get to deduct state against federal anymore.
That's right. And so, you pay both sides. So the employer pays half, you pay half. So now
you're at 65%?
Right. So I said to him, the challenge with this,
65% at the marginal rate.
I saw, and the people who are having these tax problems are the ones, typically business owners that have been successful, they build businesses and this. I said, if we adopted this, what's going to happen is a business person can say, do I want to take the risk to grow my business?
It slows innovation.
Because someone's like, if I lose, no one's going to bail me out. It's all on me. I can't deduct a capital loss except
Against income.
Right. So I'm stuck. No one's going to bail me out of my capital loss. And if I do extremely well, they're only going to keep 35 cents on the dollar.
But you could carry that capital loss $3,000 a year forever. So you got that going for you. But you can't inherit it. You cannot inherit a capital loss.
Yeah,
it goes away at death.
Yeah.
Right?
Yeah.
It's pretty disappointing.
Well, hopefully you don't have a lot of losses.
I don't. It's theoretical.
Yeah, I mean,
so what? How did the argument?
I don't know. That was
and that was it. And you're like,
I said, get the hell out of my house.
Can you pass me the mashed potatoes? And what is that Jello thing?
It was a good conversation. It was just.
Are those marshmallows in the Jello?
You have those too.
Oh my